And that's basically why most people don't even know about the existence of this account. And you'll be able to do all of this by just contributing $300. So you will actually get free money from your employer just for contributing. What's up YouTube? It's Shivansh here. Welcome back to my channel. So we all know that buying your first house in Canada is a significant milestone for all immigrants who dream of moving to Canada. And it requires a lot of time and proper financial planning, especially when it comes down to saving for the down payment of your first house in Canada, because at first it might seem like a huge task, an impossible task, to save about 50,000 or 60,000 Canadian dollars towards the down payment of your first house. But don't worry, today's video is going to be super useful for all of you, because today we are going to talk about the 3 must-have banking and investment accounts offered by the government of Canada that can actually help you buy your dream house in Canada. Now, if you're an immigrant or a Canadian resident who wants to become a homeowner in the near future, then this video is for you. We'll talk about what these different types of accounts are and how you can actually use these accounts to save your money, invest your savings, and grow your investments, and all of this tax-free so that you can accelerate your down payment savings and get closer to buying your first house in Canada. Now, let's say if your aim is to buy a house in the next 2 years, then towards the end of this video, I will also give you some exact figures that you need to save, the exact amount of money that you need to have in these different accounts, and how you can actually optimize these accounts so that by the time you get to the end of the 2-year mark, you'll have enough money saved up for the down payment of your first house in Canada. So make sure to watch this video till the very end if you want to know the exact figures and the optimization techniques. And if you haven't hit the like button yet or subscribe to my channel, then please make sure to do that, because your support is extremely important for the growth of this channel. And if you like and share this video, then YouTube will also show this video to a lot more number of people, and that will help my channel in a big way. With that being said, let's start this video. Alright, so let's start with the very first account, and that is the first time home buyer savings account, or the FHSA. Now, this is a brand new account introduced by the government of Canada just a few months ago, and that's basically why most people don't even know about the existence of this account, and that's exactly why I'm here to tell you what you are actually missing out on. Now, this FHSA is specifically designed for Canadians who are looking to save money for their first home purchase in Canada. We all know how difficult it actually is to be able to afford to buy a house, especially in the hot markets of GTA and the Vancouver region, and that's exactly why the government of Canada introduced this account for the first time home buyers, so that they're not completely wiped out of the real estate market. So with an FHSA, you can actually contribute up to $10,000 per year, up to a maximum of $40,000 in your lifetime. But what makes this account special is the unique tax benefits that it offers. So this account, the FHSA, is basically a tax-free in and a tax-free out account. Now, what does that even mean? So for example, you have an annual salary of $80,000 and you decide to contribute $10,000 out of your salary towards your FHSA. So basically, you'll be taxed on the remaining $70,000 of your salary. And on top of this, any income that is generated in your FHSA account or any growth that your investments will go through, all of that money will actually be tax-free for you. Yes, you heard it right. All your investments will actually grow tax-free in your FHSA account. So this means that your hard-earned earnings can actually grow faster without even being eroded by taxes, and you can actually save up for the down payment of your first house way quicker because you don't have to worry about taxes. The TLDR is that this account, the FHSA, is a game changer for all first-time home buyers in Canada. And if you haven't opened your FHSA account yet, then you should definitely do that as soon as possible, so that you can start saving up for the down payment of your first house in Canada and get all the tax saving benefits and grow your investments at a faster pace. But remember that this account is only available for first-time home buyers or people who don't own a house in Canada yet. So if you are in that category, then you should definitely consider opening one, because this account is going to be just perfect for you. Now, before we move on to the next account, let's take a look at a few houses and a few properties around the GTA region, so that you can understand how much down payment do you need and how much money you need to save in these different types of accounts before you can actually buy a house in Canada. So let's go to Google and search for the Canadian home. And I'm just going to click on the first link over here. So this is the homepage of the Canadian home, and it is available as an Android app and also as an iOS app. So for now, I'm just going to select our maximum budget to be $650K, and I want to select properties with 2+ bedrooms. And then for the type of house, I'm just going to select a condo apartment or a condo townhouse, because that's what I'm looking for. And for the cities, I'm just going to put Oakville, Burlington, and Toronto. And this is a very unique feature because the Canadian home allows you to search for properties across multiple cities. So you can apply the same filters and search for multiple properties across the various cities, and that can give you a good idea of what is available and where exactly you can actually buy something that falls in your budget. So these are all the different properties that match our search criteria. And then I'm just going to click on this one here. So this is in Toronto. It looks pretty good. So this is a condo in Toronto, and you can see that it's at Church and Yonge Corridor. And if you click on the images here, then we'll see all the different types of images. So it looks pretty nice, and it's relatively new as well. This is the living room, looks pretty nice. The view is nice, it's very airy. And this is the kitchen, and here's our bedroom. It also has a pretty nice view. This is the bathroom, and this is probably a den. And yeah, this is how the building looks like. This is the swimming pool, and this is the gym. So overall, it's a pretty nice property. So this one is for $649,999, so almost $650, and it fits right at the limit of our budget. Then here it says that the maintenance fees is $522 per month, and the building's age is new, so it's pretty much brand new as we saw. And then if we scroll down, we'll see a bunch of other additional information. So what is the type of the property, how many bedrooms, bathrooms, parking type, it's underground parking, one garage. And then if we scroll down further, they have some estimates as well, that what's the estimated home value and what is the estimated rent if you're looking for a rental investment property. But personally, my favorite feature is the expense breakdown or the monthly mortgage payment calculator. So you can see that they've given us an estimate that this property would cost us $3,526 every single month on a 25-year mortgage at a 4.5 interest rate. Now, obviously, this can change based on your situation and based on where the market is at and what's the current interest rate in the market. But you can also click on this modify calculation to get a better number or a better estimate based on your specific situation. So for example, the house price here is $649,999, and the down payment that they've given us is $40,000. So I think this is the bare minimum. So it's approximately 6.15%. This is the bare minimum down payment that you have to do in Canada. So because our down payment is less than 20% in this case, so we will also have to pay a mortgage insurance, which is $24,400. And then here you can actually play around with the mortgage rate depending on your specific situation or what you're getting in the market right now. So for example, at a 5.5 interest rate, the mortgage payment actually goes up to $3,896 every single month. So this gives us a pretty good idea on what to expect in terms of the down payment that we need, and then also the monthly mortgage payments that we need to take care of once we buy this property. So based on the monthly mortgage payment calculator, we know that we need a down payment of at least $40,000 if you want to buy this property, if you want to buy a property of $650,000. So now your target should be how to accumulate these $40,000 using the different bank accounts and investment accounts that we are talking about in this very video, and how you can optimize these different accounts to accelerate your down payment savings. I personally love to use the Canadian Home website or the mobile app to browse for properties in and around GTA. And since I'm also on a journey to buy my first house in Canada, the calculators and the features offered by the Canadian Home app actually help me stay on track and also provide me valuable insights so that I can make an informed decision and find my perfect home in Canada. So if you're also in a similar situation as me, then make sure to check out the Canadian Home app. The link will be in the description box below. And trust me, the Canadian Home app will take your home buying experience to a whole new level, so make sure to check it out. Now, the next account on the list is the RRSP, or the Registered Retirement Savings Plan account. Now, you must be wondering, how does a retirement account help you buy a house in Canada? Well, here's the interesting part. The government of Canada actually allows you to withdraw $35,000 from your RRSP account in order to pay for the down payment of your first house in Canada under the Home Buyers Plan. And the best part is that this withdrawal is actually tax-free. The only catch is that you need to pay back this amount into your RRSP account within a specified time frame, which is approximately 15 years. So basically, the government of Canada allows you to take an interest-free loan from your own RRSP account up to a maximum of $35,000, so that you can pay that towards the down payment of your first house in Canada, and then you just need to pay that back into your RRSP account at your own pace in the next 15 years. And this way, the RRSP account serves dual purpose. One, it helps you save for your retirement, and two, it provides an incredible opportunity to accelerate your down payment savings. And on top of this, a lot of companies in Canada also offer an RRSP matching program, where your company will match your contribution to your RRSP account up to a certain maximum. So you will actually get free money from your employer just for contributing to your RRSP account, and then you can also use that extra money towards the down payment of your house under the Home Buyers Plan. So this is the easiest way to double your savings through the RRSP account and use that towards buying your first house in Canada. We will talk more about this feature in the next sections of this video when I will show you how you can save the exact amount for the down payment of your first house in Canada. So make sure to watch this video till the very end. The third account on the list is the TFSA, or the tax-free savings account. Now this versatile account is a fantastic tool for both short-term and long-term savings goals, including saving money for the down payment of your house. Now you can actually contribute a certain amount of money every single year towards your TFSA account, and the best part here is that all the income generated and all the growth earned in your TFSA account is going to be absolutely tax-free. This means that you can invest your savings in your TFSA account and watch it grow over the years, and you will not have to worry about paying taxes on any of your investment gains in your TFSA. So let's say you have a salary of $80,000 and you decide to contribute $5,000 towards your TFSA, so you'll have to pay taxes on the full $80,000, but the $5,000 that you actually contribute to your TFSA, whatever investment gains you will experience in that TFSA account over the years will all be tax free. So whenever you want to withdraw from your TFSA, you can actually do that without any penalties or without having to worry about paying any taxes. So the TFSA actually provides you with the flexibility to withdraw money at any given time without any penalties, and you won't even have to pay any taxes on it. And this is exactly why this is a great tool if you want to save up for the down payment of your house in Canada. Alright, so now that you know the three different types of accounts that you must have in order to save for the down payment of your house in Canada, now let's take a look at how you can save for the down payment of your house in Canada and how you can optimize these three types of accounts in order to maximize your savings. Now let's say in 2 years from now you want to buy a house that is worth approximately 650,000 Canadian dollars, and from the calculators available on the Canadian Home website, we know that you need approximately $40,000 in down payment if you want to buy this house. So let's say you have a salary of $80,000 per year and you have opened your FHSA account and you contribute $10,000 every single year towards your FHSA. So at the end of the 2-year period, you will have $20,000 in your FHSA. And remember that since your FHSA is tax-free money in and tax-free money out, so you will not have to pay any taxes on the $10,000 that you contribute every single year towards your FHSA. And now let's say your employer also has an RRSP matching policy and they are willing to contribute a maximum of 4% of your salary towards your RRSP matching. So this means that if you maximize your RRSP contribution, which is 4% of your total salary, which is approximately $3,200, then the company will also give you $3,200 and put that in your RRSP account. So in total, at the end of the first year, you will have $6,400, and at the end of the second year, you will have $12,800 in your RRSP account, out of which only $6,400 will be your contribution and the remaining $6,400 will be contributed by your employer because of the matching policy. So now you'll have $20,000 in your FHSA and $12,800 in your RRSP. Now since your salary is $80,000 per year, you'll be very easily and very comfortably be able to save at least $300 every single month and contribute that towards your TFSA. So if you do this for 2 years straight, you'll be able to save 300 times 24 months, which is approximately $7,200. And by the end of the 2-year mark, you'll have $20,000 in your FHSA, $12,800 in your RRSP, and $7,200 in your TFSA, all saved up for the down payment of your first house in Canada. Now keep in mind that these are just your contributions to your investment accounts. Now over time, if you've made the right investments, your investments will also grow, and you'll also be able to benefit from all the interest income and all the growth that you'll experience in these accounts. So your overall savings and investments will be much bigger than $40,000, and this is how you can save up to $40,000 of down payment towards your first house in Canada just by contributing $300 every single month out of your own pocket. So there you have it. These are the 3 essential accounts that all aspiring homeowners in Canada should consider getting, because these accounts will accelerate how quickly you can actually save for the down payment of your first house in Canada. And the combination of these 3 accounts, the FHSA, the TFSA, and the RRSP, can become your secret weapon of saving taxes, growing your investments tax-free, and getting closer to buying your dream house in Canada. I hope you guys found this video to be useful. If you did, please make sure to hit the like button and also subscribe to my channel, and I'll see you guys in the next video.